What's going on, guys? Welcome back to the channel. I last did my last video update on November 22nd, which was about 3 or 4 weeks ago. And the market has rebounded pretty decently significantly. We're having some pullback the last 2 or 3 days here. But on that 22nd, which would have been, I think I did the video on a Sunday, so we hadn't opened. We had this last candle, which was a Friday. And I had said in that video that I didn't think we had bottomed yet. Well, I was potentially wrong. I think that we potentially may have bottomed and could be potentially trying to consolidate here, maybe a little bit of a small pullback here to this 50% fib and reload and going higher. So in this video, I'm going to go ahead and go over SPY, QQQ, and then I'll go over my personal positions. So as you can see, the S&P 500 bottomed right where the October 10th China sell-off scare was when Trump had those tweets out. The market tanked. Ended up rebounding, making new all-time highs, and then starting to pull back, and then ended up double bottoming essentially right around this 6,500 level on November 20th. Since then, we've had a pretty significant rally. We've had a little bit of consolidation, I guess you could call it, pullback the last couple days. Tech has been having a little bit more of a beating. If you go and look at the NASDAQ, never made a new all-time high compared to the S&P, and is starting to pull back a little bit too. The reason why I'm not concerned is I had some charts laid out here. So you can see here, I put a Fibonacci retracement on here. So since we were in a bullish uptrend move here, naturally coming back down to this 0.5% or this 50% fib is where bulls would normally, you'd want to see them step in, reload their positions for another leg higher. So if the seasonality of December, the end of December being seasonally extremely bullish, I could potentially see into the end of the year, maybe a little bit sprinkled into early January, of us making a push back toward these maybe like 2,600 or 26,000, excuse me, maybe even a little bit higher over the all-time highs in the NASDAQ. If we get that so-called Christmas rally that everybody talks about. The S&P has been a little bit more resilient just because it's not completely reliant on tech specifically. It has 493 other companies besides the Mag 7 that it relies upon, and those companies have started to pick up, which is something I'll also get into with RSP later, which is the equal weight S&P 500. So, but you can see here, if you've been watching my videos, you know I'm a big fan of anchored VWAP. So this is an anchored VWAP from this low on November 20th. We closed above it today. We dipped down below it this morning, made me a little concerned. But right now we're holding going into the close, which is a good sign. It shows that buyers stepped in where they needed to, and could potentially mean that it's just a dip to be bought, and we could be on our way a week from now at new all-time highs. So we'll see how it goes. I also did a Fibonacci, excuse me, I didn't do one for the S&P, but I don't think it's hit it. Let's go ahead and just do it right now. If I do it from there to the high, so it's still got a little bit more ways. It was heading there this morning. It was only about 40 points away. So I'm going to leave that on the chart to see if we get that direction, and how far away we'll be depending on what the market does. So, but the other thing to take in consideration, the Russell's been pretty strong. So the IWM is essentially all small caps. A lot of the stocks in this that are in this instrument are not profitable. They're very small companies that are starting to barely hit the ground running. They are pre-revenue companies. They don't have a lot of revenue, if at all. And to me, this shows risk. This shows how much risk is in the market, how much money is flowing into these companies that are very high beta. And high beta just essentially means the volatility of the stock fluctuates based off price. So, you know, some stocks may move $1 each day. Some of these higher beta stocks could move $4 or $5 or even more sometimes, depending on what the market's doing. So, but to me, I have been in the camp, and in a private Discord that I'm in, I've been talking to a lot of people that I think IWM is set in 2026, potentially, depending on what the Fed does with rate cuts and how well the economy holds up, that it could outperform SPY and QQQ. That's just a hunch. Don't take that as personal trading advice. I don't actually own IWM or have any Russell exposure in any of my portfolios except a small HSA account that I bought IWM shares about 3 or 4 days ago. And that's the only place that I actually own IWM. I don't have them in retirement. I don't have them in my own investment account that I actually manage myself. So just food for thought. But it's been holding up pretty well. So I will be keeping an eye on this. You can see here if I zoom out that we've been in this consolidation range since November 20, November of 21. So almost, let me think here, a little over 4 years now that we haven't moved anywhere. We haven't made a new all-time high. So I'm thinking potentially that the Russell IWM, if you trade ETFs, is the best play risk to reward going into 2026. It doesn't mean that tech won't perform well. It doesn't mean that the S&P won't perform well. I'm just thinking that the Russell will outperform everything in 2026. So let's go ahead and get into some of these positions. So I've made a lot of changes to the portfolio since the last time I did the video on November 22nd. I still have my meta shares. I trimmed a little bit on this big pump up here because the 200 moving average was sitting up here. The anchored VWAP from the tariff scare when we had that massive 20% drawdown was sitting right around 662, and then the 200 was on 671. So I sold some shares. I believe it was somewhere in here. Just to reduce the position size a little bit. So I only have 8 shares, which really isn't that much, but it consumes almost 16% of my portfolio just owning those 8 shares, so it's decent. AMD, no significant update changes to the portfolio. I did end up buying some. I want to say I bought it on this candle here and maybe some shares in here. I did trim as well. I used to have 35 shares. I only have 30 shares now, and because of that, because I sold and then bought back, my average cost actually went up, so which is fine. AMD's kind of in no man's land right now, though. I'm still in the hunch that it could potentially, if the market continues to sell off, it could come down and get to this 187 level that I have here, even dropping down, maybe potentially getting to this 171 level, which is the 50% fib from the April tariff low all the way to the recent high on October 29th, which was 271. That would be a really good spot to load up if it gets there. And I will be adding probably, I might buy 20 or 30 more shares if it gets down to this 171 and just essentially double my position there. Because I think the risk to reward and how the chart looks there, it's got the 200-day, it's got an anchored VWAP. If it continues to dip down into this golden pocket here at this 0.61 fib, then that would be even better. But I will probably start buying here at this 171. I may buy probably 5 shares at 187, maybe 10, but I'm not going to get too aggressive there because I think that if it's going to come down and test here, I think it's going to give one more good flush. It's going to finish closing this gap that we had on October 3rd, and I think that's where you'll start to see heavy buyers come back in on this stock. All right, so my Nebius position, I have been continuing to add. I think in the last video I had 50 shares around like $95 for my cost base. I bought 5 more today, right around somewhere in the 79 to 78 level. I don't know specifically where I bought them, but I own 55 shares now. Now, this stock as well also has an earnings gap, or I think it was the news. I think this gap was the Microsoft news deal that sent this stock up this high. So if it comes down here and gets into this golden pocket with the 200-day, I don't know if I'm going to get to 100 shares on this company. I don't want to overexpose myself to a company that is extremely high beta because recently I've been transitioning my portfolio with the anticipation, like I said, that I think some of these smaller cap companies in 2026 could outperform. So that's where I've been rotating. That's partially why you don't see Amazon up here. I sold my Amazon stock not because I think that Amazon won't do well over the next year or two, but I think that that money that I had in Amazon, I could potentially make more money in another stock in the next year or two that could offer me 2 or 3 times the return that Amazon was going to. Is it a little bit more risky and not as safe as owning Amazon? Yes, but that's the risk that I'm willing to take at this point. So I like that we've kind of double bottomed here, but I still think there's a potential if the market really lets go here that we could see 65, 70. I'll be a buyer in here for sure, even into this gap here. But like I said, the max position I'm probably going to expose myself to on this company is probably about 75 shares because I don't want to own almost $10,000 worth of this stock and overexpose myself. I don't want this to be consume too much of my portfolio percentage is what I'm trying to say. So Rocket Lab, this was a great buy. I wish I would have bought more. My gut told me to buy more, but I just didn't do it. So I bought 100 shares, and I think in the last video I only had 50. I ended up doubling the position somewhere. I think I might have done it on the first here. So you can see here I have 100 shares at 41.04. Stock absolutely ripped higher, having a little bit of a pullback. You see I have some fibs here that I'm looking at. Buy a couple more shares here at 51, and if it gets back down here to the 48, 47 level, I'll probably buy a couple more shares. But I don't have a lot going on here. The only thing I can tell you is there's been a lot of hype with the space industry, space stocks, everything, because as you know, Elon Musk has talked about his SpaceX company possibly IPOing in 2026 at potentially $1 trillion. If that's the case, there's a lot of smart people that I watch YouTube videos on, that I follow on Twitter, that are way more invested and know more about Rocket Lab than I do. And this is how I learn about all my companies, is that Rocket Lab will not be $55 if SpaceX IPOs at $1 trillion. Now, I'm not saying it's going to be a $300 stock next year, but it could be a $100 stock. So the way I'm thinking about this is to potentially add exposure now versus later, and then regret not buying when it's $55 or $50 or $48. So just what I'm thinking. Once again, none of this is financial advice. I'm not telling you to go out and, spend $50,000 right now on Rocket Lab at $55. I'm just saying that these are all potential things that could happen. It also could, SpaceX could IPO and completely collapse down, and the share price could completely drop, and so could Rocket Lab. And Rocket Lab could easily come back down here into the 30, even the $20 range, and I'll probably buy more there too. So this is a company that I've spent a lot of time over the weekends watching videos, trying to understand the company, trying to see the vision, and I think I'm understanding it more. So um, that's all I've got as far as this position. I will update you guys. I'll probably do one more video towards the end of the year, maybe right after Christmas, and we'll see what happens with the overall market and all these positions. Um, my HIMS position, I haven't done too much. I think I might have added maybe like 10 or 15 more shares. So I have 125 shares. 36, 37 is my average cost. I'm up very small on it. Um, I like I like the consolidation starting to form here. You could see how this massive drop nonstop that started on October 16th to November 21st, over a month of just straight selling every day. And now we've started to slowly consolidate. Doesn't mean that we bottomed here. It could drop into here. I will gladly add more. That's why I haven't added any more shares. I'm comfortable with the position. If it starts to run, it starts to run. But I'm not going to overexpose myself here with the potential that news could come out, the market continue to slide, and the stock slides. So I'm happy with the 125 shares here, and we'll see what the position does. I still believe that if this wedge holds here, that it's going to eventually come up here and start testing eventually this $50 range. And if it can break out of here, this potential all-time high at $73 could be back in play, which this will be a very, very nice gain. So I've had some mixed feelings about Ethereum lately. I got into this position a long time ago. I've been in this position over a month now. And I trimmed the position, I want to say on this candle here, or it might have been here yesterday when we lost the 200 day. I owned 300 shares. Now I only have 200. I just said, you know what? I'm a little overexposed right now, and I'm not feeling comfortable. I sold a covered call last week, made like 40 bucks on it when the price had pumped up. And then as soon as it started to slide, I just said, you know what, I might be a little bit overexposed. So I reduced it to 200 shares. It's still a good amount. It's about $5,000 of equity that I have here on the Ethereum ETF. And I don't want to get too overexposed. I also own just straight Ethereum, one whole coin as well. So essentially I've got almost $8,000 exposed to Ethereum right now, which to some people isn't a lot, but to my account size, which is a little over $34,000, that's a decent amount. That's a good chunk exposed to crypto, which is a very volatile asset. So unless you're willing to stomach some of the volatility and everything, then you shouldn't have excessive exposure. I would say 10 to 15% of your portfolio could be exposed to crypto, but beyond that, you're asking for some trouble if you're not willing to accept the volatility. So now this company, Zeta, there's a person that I watch on a lot of videos on Twitter, and essentially it's a marketing company that is using AI to essentially try to revamp how agencies use marketing tools and things like that. And I kind of liked the idea of what they're doing. Um, so I bought 150 shares. I like the chart actually kind of too. You can see here it's got a nice wedge. This anchored VWAP held beautifully today. Um, the only day it's had a close below this was November 4th and 20th, and it's rebounded very well quickly to recapture that anchored VWAP from the tariff low down here at $10. So the 200-day moving average is going to start slowly sloping up. So I started a position at $18 a share, or 18.30, or excuse me, actually my position's at 17.85, and to only own 150 shares, it's about a $2,000 position. So there's no massive risk. I mean, the stock would literally have to go to $9 for me to lose a thousand bucks, which it very well could. But I don't necessarily see that happening unless the market really imploded. So just a small position. We'll see what happens. I did sell some cash secured puts down here at 17, and I sold some at 16.5. Right now, those are looking good. As long as this stock can stay above $17.50 by Friday, I'll collect both premiums on the 17 and the 16.50. So we'll see how that goes. As far as Oscar, so it's hard to say. It's hard to say what's going to happen here. This stock, I feel like, has been waiting for the ACA extension news, and it sounds like Democrats and Republicans can't figure it out. So it could be a next year thing. But I know in videos that I've watched and things that I've been reading on Twitter from a lot of people that are very invested in this company and know a lot about this company, that the company isn't concerned about if these ACA subsidies that the Democrats and Republicans are trying to extend that will cut too much into their profit margin for next year. They believe that they'll still be profitable with or without the ACA subsidies. So if the Republicans and Democrats find a way to extend those, let's say for another year, I think this stock is going to get off the mat quick, and I think we're going to eventually could come back up here and test this 23 without any official news from the news regarding the ACA extensions. I think we're range bound for a while. I think somewhere in 2026 we could get back up here to 23, maybe even get back up here and test this 29, this level here. But without those ACA extension or some type of news that benefits Oscar, I don't know how long this position is going to take. But I'm comfortable holding it. I held it on this big drop down here. I was down $1,100. Now I'm only down $490. I was up for a little bit for a few days on the position. It's been volatile, and it's been a company that you just have to believe in, understand what they're trying to do, and ride the wave. The last company I didn't own. This company I got a little bit faked out on. I liked the chart overall, and I like what the company is doing. So Absolera is essentially using AI, artificial intelligence, to, if I understand everything with the company correctly, they are essentially using AI to discover new forms of vaccines and medications and like viruses essentially, and they contract with different bigger companies to do these things. So they could potentially, depending on how large the company can grow, it could be huge. That's why I bought this little biotech. I don't know every single thing about the company, so I'm not going to try and sit here and tell you that it's the best company in the world and it's going to go to $100 a share. I bought it, one, because I liked the pullback on the chart. I liked the levels here that you can see here in the green. It was holding above the 200-day, and now it's lost it. If it doesn't recapture this 200-day pretty quick, I'm going to cut this position. I'm not going to let this go and hold this stock down $2 or $2 and let this thing, because it's a very speculative play here, and this could unwind quickly. And even though I only have about $2,000 in this, I could go easily down $1,000 on this quick. One, if the market rolls over, and two, if it does not reclaim this 200-day moving average quickly and get back above these green arrows, these green lines that I have had here. So you can see all the support resistance, 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 and then came back in here finally. And now it's starting to, it looks like it's going to potentially break this 345 level and try to head lower. If that's the case, I will cut this position quick because, like I said, it's speculative. It's not something that I am willing to take a massive loss on. But we'll see what happens. If you draw the fib from the April low once again here, you've already passed the 0.5, the 50% retracement, and we're in the golden pocket right now, and we're starting to potentially drop below this. It's telling me there's nothing else for me to sit here and say, okay, this is bullish. This setup's bullish. Everything is telling me you're below the 200-day. You found no support at the 50% fib. You're not finding support here at the 61 to 65% fib. It could just be a loss, and you just got to get out. So potentially watching this, I'm going to see how the week closes out. If we close down and we are not holding this support where it's at right now, and then I'll probably look to exit this position and just take the loss if it's 200 bucks or 250, whatever. But it's better than $1,000, and I'm sitting there and thinking, I need to raise more money for another stock, and now I've got to sell this stock at $1,000 loss versus a $250 loss. So just something to consider. But I have a bunch of other stocks here on this list that I'm also watching. Of interest here would be, in the last video I had ASTS, but when I bought those additional 50 shares of Rocket Lab, I sold the ASTS, which in hindsight was once again a mistake. I did sell a $60 cash secured put for this Friday. So if it drops into this fib, this golden pocket here at 61 to 65% fib, and gets down and closes on Friday below $60, I'll be assigned 100 shares of ASTS, which would be $6,000. So, but I'm completely fine with that. I like the setup here. I think this is just a pullback. I'd love to see it pull back more, and then I think that we could potentially, in the next couple months, get back up to this new all-time high, or even potentially break it. So we'll see what ends up happening here with this stock. The other stock that I am watching as well is Path. So this has been a very hot commodity on Twitter, and I was watching it because they had this massive downtrend. So you can see here 1, 2, 3, 4 on earnings on a big volume candle, broke above, had a little bit above, and then failed. Now I'd love to see this get down maybe into this anywhere below like $15.75 to $15, and I'm probably going to buy 200 or 300 shares here. I think that the risk to reward of buying here for another attempt at this breakout would be the best bet. If it does break out, I think that there's a potential that this has some legs maybe to get back up here to this swing high at 27 bucks. So that's a $13 move in profit, essentially, if I was to load up somewhere in the 15 range to get up here to 27. So just something that I'm watching. I will keep an eye on this if the market continues to show weakness into Friday, and we'll go from there. The last thing I wanted to do real quick, because I didn't show you guys last time, or show you at all during this video. So you can see here, I'm on my interactive broker account. Excuse me, I think I said 34,000 earlier. So at $33,511. Right now I only have unrealized gains of $289. I was up almost $3,000 earlier in the week, but after all this carnage, crypto falling off, I'm only up $291, and that's okay. And you can see all my positions are down here. Sorry, my head's knocking me out of the way here. But yeah, so that's where we're at right now. I will keep you guys updated. If you like the video, please like and subscribe to the channel so you can be updated when I continue to make these videos. All right, see you guys later.